Antariksh and Bert, great to have you here today on the panel. So the discussion topic is leveraging digital public infrastructures for increasing adoption of digital credit infrastructure. I must say that over the course of last 4 to 5 years, we've had a phenomenal journey in terms of the traction the AA ecosystem has had, and the numbers speak for themselves. We now have almost about 16 account aggregators live, almost 600 participants as FIUs and FIPs in the ecosystem, and additionally almost 8.5 crore accounts or consents having been granted through the whole AA framework. So looking back, Bert, as you lead the account aggregator initiative at Protean, would like to understand how has the journey been?
Thanks, Amit. I think it's a pleasure to be here and talk about DPI on a panel like this. A has been a phenomenal journey for the ecosystem and for us, and the use cases it unlocks really put consent at the heart of everything. So while people look at account aggregator as more a financial sector consent framework, it's unlocking a lot of value for the end entity seeking either a loan or a financial service product or even opening an account. So as part of the account aggregator committee who's working on now multiple new use cases, we are not just seeing loans, credit underwriting, insurance underwriting, loan monitoring, which are some of the obvious use cases, but we're very interestingly also seeing people like your personal finance wealth managers who are actually keen on getting access to your data as frequently as weekly or even daily. There is an ask from the industry on how we can actually increase the frequency of data fetch. And I'm talking of like a recurring fetch. So you may take a consent for a period of time and then keep pinging the account. So there is a lot of innovation that's happening on account aggregator. It was set up now almost 3 years ago and cumulatively has crossed 100 million consents, which is a huge boost for the network. It creates a lot of confidence out there. I think on the MSME space specifically, I would be very keen to explore on this panel as well what more we can do as account aggregators.
So, moving on to the ONDC initiative, Antariksh, which you have been part of, while it started as a initiative to enable digital commerce, for many of the MSMEs which are otherwise not getting covered through the other institution-led initiatives. What I would like you to bring your views on this discussion is how is the commerce to credit journey being enabled, and how has the journey been so far through ONDC?
Like some quick background. So we started with credit like last year towards the end of August. So we started with like two basic use cases like unsecured personal loans, and the other product was for MSMEs. So we call it like GST database invoice financing. So that was primarily for the sole proprietors. Like earlier this year we went live with unsecured personal loan, and we'll go live with our GST product by mid-September, like 15 days from now. So we've come a long way. So we had some early adopters like Protean Bank and a couple of more lenders. Now, see, what we do at ONDC is we standardize the process so that, like, irrespective of the lender or the fintech, they all will be following the same process. We tend to make it fully digitized. So that basically sort of brings down the cost of the credit, because usually if you do it manually, it checks up the cost because of all the costing which is involved, which basically helps us with more inclusive credit, because when there were so many MSMEs, they were like completely unserved because of no alternative data available to the lender for underwriting. So that was one thing. So the second use case which we are targeting is more for larger institutions, and not just for sole prop, but essentially private limited as well as partnerships. So idea is to basically do like higher ticket size loan. Again, like, and actually I was at one like Australian venue. There were like a bunch of startups, they had attended session, like a lot of them were like, Asha, we don't know how many documents they will have to provide. They had no clarity on the PAT of the entire process, lots of issues around KYC and so on and so forth. So what we are doing is we are basically standardizing this entire process, which basically means all the participating lenders who are basically following the same process and the same DAP on the network. So that will sort of streamline this entire process for the overall entire industry. The third one is the alternate data, which I just spoke about. But here, I'll just give you one quick example and this is what we are doing. So, we spoke with the RBI's platform as well. Also, we are working with several other institutions to make alternate data available on the network. Now, like MSME spectrum is like fairly large. Like it starts from like a very small enterprise to the large ones. Now, the problem here, like especially in India, like we work with many lenders, but it's just that they didn't have the model as well as the data to effectively underwrite like that particular sector. So as of now, we have like supply chain financing data. So we are working with Dsouza and like a couple of more institutions. We have farm store data, like that's coming from Absolute, like one organization. Like I'm working with Shiplocket. So they have all the merchant data, and so what we have done is we've created a standard template. It's more like your civil report, but it's just like domain agnostic. So it works for agri, it works for supply chain financing, it works for the other domains as well. Lenders do have the models, so they are happy to consume that piece of information. So that will eventually, like hopefully we should go live in like 2 to 3 months. So that will basically increase the spectrum of the MSMEs that we'll be able to serve in the near future.
Thanks, Antariksh. So, continuing from that point you made, I think the audience here would also like to know how are fintechs participating in ONDC to further extend the capability of the whole framework to deliver credit.
Yeah. So see, the role of fintech on ONDC platform is to increase the distribution. So by and large on ONDC there are like 2 roles, especially for credit and the other FS use cases. One set of companies or entities that take care of the distribution, like so fintechs, like Dsouza, Tata Digital. On the other side, we have the manufacturers. For credit, that will be the lenders, would be NBFC or large banks. Now, here the role of fintech, honestly, they can get as innovative as they can, because what we have done is we have built the standard infrastructure on which they can actually build all the innovative solutions. So it can go from, again, like we spoke with Namayati earlier this year, so idea was to basically enable credit for their auto drivers. So they can get credit in the morning, they pay the rent for the auto, pay for the fuel, and by the time they are done for the day, like they'll make some money, they can repay the loan on the same day itself. So these are, this is one of the use cases, to be very honest, but our network is fairly flexible. So it's really, it's up to the fintech, like how innovative they can get. So similarly, like we are working with some other fintech organizations as well. They are like catering to like dairy farmers. The other ones are doing credit for supply chain financing. So here, like at the end of the day, and honestly, like these are the immediate use cases that which we have encountered. But at the end of the day, like they can just come to us and say, I'm going to do this. It's just that we'll be able to make it, or we'll be able to enable it on the network. So, that's pretty much it.
So, Bert, my next question is to you. And speaking of MSME financing, while there have been many initiatives and different approaches towards deepening credit in MSMEs, supply chain financing included, and we've had even seen regulatory action on this in the form of initiatives like TREDS platforms, getting launched. Where do you see the limitations, of these, or I would rather put it this way, instead of limitations, where do you see the further opportunity and potential, which is getting addressed and further likely to scale up, through the DPI and of course a framework being a part of this, infrastructure?
No, that's a great question. I'll start with just talking about where Antariksh left off on the personal loan journey on ONDC, which went live. We took a large distribution company called Pay Nearby live last couple of days, and we did a demonstration to show how a consumer in rural India can actually go to a Pay Nearby agent, ask for a personal loan, and the request for the loan is initiated by taking their bank account details using account aggregator, and then broadcasting that standard data packet of the bank statement to multiple lenders on the network. You have currently 3-4 lenders who are active on the ONDC network for personal loans. Out of the 3 or 4 lenders, there are certain lenders who will come back with a loan offer. And now the consumer who never had visibility of even those financial institutions has a loan on the screen. So it's like searching for flights, and you get discovery of flights of airlines you didn't even know exist. That's the kind of experience they're getting on the ground. The typical behavior of individuals, especially in Bharat and rural India and the small and micro MSMEs, is they go to the nearest lender. It's like how in the old days our generations back used to go to the nearest branch. Look at our new generations, we have gone beyond digital banks, and now they're even looking at neo banks, right? So the perception of the new generation and the way digital has enabled this experience is go to where you get the best deal. So it's become a demand or a buyer's market, if I were to put it that way. And technology like open networks and technology like account aggregator, which is a consent framework, if you bring that together, now answering your question in the MSME sector, micro entrepreneur, small MSME in rural India doesn't have access to a large scale financing entity today.
Yeah.
If we can get access to his KYC data, and like Antariksh said, for multiple data providers, including the RBI's new platform which was announced, that can give you large view of the person's KYC from a 360-degree perspective. So you get access to their financial history, you get access to their GST data, you get access to other data pools which could include utility bills, which could include shop registration, other licenses which they may own. And all of these pieces of data cohesively give you a very unique picture of the person suddenly. And now if you're able to broadcast this piece of standard data to a bunch of supply, like he just called out, you have a very interesting demand market again. Yes, suppliers will also have questions on, is this going to put pressure on their margins? Is it going to become a back end of financiers versus the front end is going to become platform companies? I think that's for the market to evolve. And I think if there are financiers who can build smart algorithms to also look at this data and come back with an aggressive offer. For example, in the agri sector, giving you one more input, the government is looking at building something called Agri Stack, which keeps getting spoken about, where the farmers' data, including their land records, their crop data, the survey of their crops over the last 3 years, is something which we're looking at as an alternate data source to provide to a platform company or to a financier to take an informed loan decision. And if I know that Bert is a farmer who has been sowing sugarcane for the last 3 years and has got a very steady rate of crop growth, it gives me a lot more confidence to lend to the person at also a much more aggressive rate. So taking combinatorial view of the consent frameworks, alternate data sources and open networks, I think is a beautiful time to be in the space of building DPI, and we are at the thick of it with multiple partners around us.
So Antariksh, Bert touched upon some of the recent initiatives that have got announced, especially at GFF, whether we talk of the unified lending interface or we talk of NPCI's payments initiative of bringing BBPS on B2B channels. And these initiatives, as we look at how they are going to enable a deeper accessibility for B2B trade getting financed. So at ONDC, how do you see the next phase of credit enablement, particularly from a B2B credit standpoint? And just to add to that, what are the challenges that you see in enabling that, considering that B2B credit, right from underwriting to fulfillment, entails many more layers and complexities which are not as easily addressed in the regulatory framework as consumer lending?
Okay, so I'll answer the first question. So basically, like how this introduction to ULI will sort of work with ONDC to address this challenge in B2B credit. See, by and large, ULI is a bouquet of APIs. So they are the alternate data provider. So like as we just discussed, you can fetch the farm data or which is what they are doing. Yeah, so they have done GST, then farm data, they are partnered with Amul as well. So here, like as I mentioned earlier, right, so there were like a segment of data dark MSMEs they were like completely unserved by the formal credit institutions. So what's going to happen is now ONDC and like so they will actually work together, because what ONDC does is basically creates a market. So it's basically the aggregation of demand and supply. So if you are a fintech, you can basically work with all the participating lenders as long as you are part of the network. And if you are a lender, then you can basically work with all the fintechs irrespective of the use case as long as you are part of the network. Now, if you want to enable more and more use cases, like being a lender, let's say I want to cater to dairy farmers or maybe some other supply chain financing use case, now I don't really have to worry about data, because this is where the ULI comes into the picture. Because I can just really be a part of their API suite. I can do KYC, I can do GST fetch as Bert mentioned. I can also fetch the relevant data which I need. And it's also consent based, so it basically takes care of the issue this DPDP to Aadhaar and so on and so forth. So that's going to be the shift which I see in the next at least a year or so once we go live. Can you just move to the second question on that?
So the second question is the challenges being seen towards enabling B2B financing, through these frameworks.
Yeah. See, I mean, honestly, so far we are still in the early stage, because as I say, we'll go live with the GST database invoice financing, but it's fairly straightforward use case, completely digital, but it just targets the sole props. But going to the larger, like private limited partnerships, so we are just getting started with standardizing the process as well as creating protocols and everything. But I think the major challenge which I foresee, and which is what we even encountered when we went live with PL and as well as the GST, is the completely the shift in the methodology. Because earlier the lenders are accustomed to doing things in a certain way. Now this completely different. Like after availability of all the data in various formats and like directly from the source, so it's a different process altogether. Like for the larger ones to adapt to that process has become a bigger challenge. The second thing is, and we are actually working with the regulator as well. Like currently, there's no digital way to KYC non-solved blocks. Like if you want to go to the other or serve the other entities, it has to be manual because of all the field checks and so on and so forth. So which is why we are also putting this recommendation where if we can have this relevant documents in central repositories like Locker or even account aggregator for that matter. So that basically brings down the cost, and as well as it will also impact the EAP of delivering credit, which is actually a very major issue at present. Like again, like I spoke with multiple MSMEs and like they have no clarity. So they will take like 2 months, 3 months. They were like 3 months ke baad milega, then what's the point, because I'm getting this order now and so on. So that will sort of enable us to build credit or the infrastructure for credit, which will help us deliver credit digitally to the larger entities. So these are the efforts are already underway. We are working with various regulators, we are working with the other ecosystem participants as well to help us get to that point.
Thanks, Antariksh. Bert, my last question, of this discussion is to you. If you were to take a utopian view of the further evolution of DPI, where do you see India heading towards, and what kind of newer initiatives can the industry expect, even more in the context of MSME financing as well?
I think the success that we all saw on the back of Aadhaar and UPI was, the foundation of a lot of the new learnings, saying that it will not be government-led, a government-driven platform. Like ONDC is not a platform. A lot of people keep referring to it wrongly, which I know Koshi keeps correcting, saying it's a protocol, it's a network, it's an ecosystem. And the way we look at each new sector, whether it is e-commerce or whether it is agriculture or health, the idea behind it is in each of these sectors, there is a need for one, standardization of data, and the two is standardization of ways for demand and supply sides of those ecosystems to talk to each other. So if we just take that common formula and apply it to every sector, if I take the example we just spoke about on B2B financing, I see even an opportunity in future when there's a B2B purchase done on a platform as part of a ONDC transaction. At the point of making the purchase, the checkout page gives the person an option to say either you pay now or you pay later, and it gives you real-time discovery of purchase financing options, which is part of the next roadmap of ONDC's next set of things to do on open finance. So I think there's a lot that can be done with just following this simple method. And like I said, the ecosystem is moving gradually from a platform-centric model to someone who's focused on either the demand side or on the supply side. Earlier there were people who were trying to solve both sides, saying we will bring in the customer and we will also finance. If you just focus on bringing in the customer, doing the onboarding, and then finding the best financing offer, it allows for you to kind of go really wide and really deep in terms of what you're capable of. So I think that's something which would really help us to see the market expand. We also see a lot of the new DPIs, and you touched upon the macro view. There's a lot of digitization that happens where we are in tier 1, tier 2. Tier 3, tier 4 are still far from meaningful digitization. They have telco networks operating, there's OTT consumption, you have WhatsApp, which works well for them. But they're still far from actually doing commerce, and they're still far from digitally driving the GDP, if I were to look at it from that lens. And if we can enable them with this kind of technology and infrastructure, I think in the next 5 to 10 years, that's really going to be a meaningful shift.
I came across this industry-specific requirement of pharmaceuticals, wherein you have API manufacturers on one side, formulations on the other side, and the initial conversation being coming from Vayana, they talk of financing, right, like credit financing, etc. So I'm sure as compared to the pharmaceutical industry, such type of portals will be existing in other industries as well. I'm trying to address these type of requirements, industry-specific.
If you break it down to taxonomy, which is what ONDC does really well, which is break it down to the lowest metric or SKU, which allows people to discover it in a standard term. So if I'm searching for a particular product, today financial services can be broken into easy buckets. Like you can put it in a PL bucket, working capital loan, housing loan, purchase finance, and so on and so forth. These are SKUs. Similarly, if you look at the e-commerce space today, you have groceries. Within groceries, you have so many subcategories. You have food and beverages, you have so on and so forth. Within pharmaceuticals, if you are able to break down the SKUs at an individual product taxonomy level, that will allow you to then create a standard way for people who are bringing in supply to have those standard definitions, and people who are searching for them to find those linkages. And along with that open discovery, it brings in competition. So instead of actually keeping it closed loop, can you open it up to more partners who have the same product? So if there is a particular, like you mentioned, OTC, which you're searching for, can you bring in a single kind of search, like a Google search, and on the other side you have multiple suppliers that come up in a descending ranking of what is best for the buyer, and then you give them financing options as well. I really like this, the idea of Namayatri also giving a daily loan to an auto driver. All of this becomes possible because you have unbundled the discovery of the auto driver and how he does business, which keeps him sticky to the app. And then you also unbundle commerce and finance, which allows him to now bundle finance into that single ride. So these things were not possible before. The moment you break the monolithic journey into smaller pieces, then it becomes easy for you to kind of stitch it together. I think the best example again, which comes from Koshi, is think of it as Lego blocks. The moment you break the monolithic block into smaller blocks, you can create different shapes with the same blocks. And I think that's what we really need to apply our minds to. Very happy to work with you and the team to see how we can bring in supply chain finance to the deserving segment. We think it's, from an industry view, it's almost a $200 billion untapped market. So how do we actually create these data standards, work with ONDC rails, and really accelerate it? Yeah.